Welcome back here in Frankfurt at the Crypto Assets Conference 2021A. As announced before the break, next up will be Dr. Ulrich Bindseil from the European Central Bank. And Dr. Bindseil, it's a pleasure to announce you again this year.
Thank you, Marcel, and very happy to be here again. And I hope I have some news for you. Let me share my screen to give you my presentation. So I think now you can see it. And topic today is digital euro, and in particular the impact on the financial system, which is a crucial topic, of course, in a positive sense, potentially also in a negative sense, depending on the perspective. And what has happened since the last conference, we definitely had our digital euro report out in October 2020. And I have some few slides which really give again some key conclusions of this report. And one key message was the digital euro would complement and not substitute cash. So central banks will obviously continue, in this case the ECB, to also issue cash. So all the things that some believe are associated to CBDC, which only can materialize if you get rid of cash, they are not relevant. They're not applicable for digital euro. Example, some people would say, if you get rid of cash, you can impose deeply negative interest rates on people. That's not relevant for us because we will continue to issue cash and so on. Second, the report is very clear on synergies with the industry, that the digital euro should be issued, if it is issued, when it is issued, relying on the industry, not reinventing the industry in a parallel universe. And then the report also said bluntly that the digital euro was not necessary so far, but there are scenarios which are not far-fetched where the digital euro becomes useful. And the main benefits of a digital euro, according to the report, would be its potential to support the digitalization in the European economy. And one crucial element of this digitalization is the one in retail payments. So no doubt, if you read the report, you get the impression that retail payments is the first and most obvious use case that policymakers had in mind when drafting this report. So, and in this field, obviously, the decline in the use of cash is a key scenario. So the idea then to preserve the ability of citizens to use central bank money in retail payments in a convenient and modern form that they may prefer to banknotes if they want. It's up to them. But if they prefer more and more to pay digitally, the central bank should keep its offer that citizens can use central bank money as a solution, as one solution amongst others. And then one prominent topic in the report is also the sovereignty concerns issue for Europe. And there it mentions foreign private digital means of payment, but also possibly future foreign CBDC. And in private digital means of payments, I think one can both distinguish the incumbents. There are many international companies very successful in retail payments and with the growing market dominance in Europe. And then, of course, looking into the future, the possibility that stable coins could also enter this market. So the report is transparent that a lot of things have to be specified. Still, it doesn't, it lists a lot of options, but it's not prescriptive on which options in the scope, in the technical specification should eventually be pursued. So things that we will look at is, first of all, of course, the user perspective in detail. We had a public consultation, but that was only one element of gathering the user perspective. Then there are legal issues, of course, starting from the legal basis via legal tender question, and then relating to various secondary legislation possibilities that could react or support a digital euro. Then there is the back-end infrastructure question. So what will be behind in terms of technology? Then what will be at the front end? What will be the user seeing? What devices will the user be able to have the digital euro on? And here the picture gives you an answer, tentative answer. And then the question, the distribution framework. How will commercial bank money and banknotes maybe be exchanged into digital euro in the context of the front-end solution? So, of course, one, and that relates maybe to the technology behind, but also then to the way of usage, is account-based versus bearer-based, as we call it. And the question of the programmability and online versus offline. So account-based, one could say, is the standard for retail payments. So if we say the digital euro should be used for retail payments and should not reinvent everything, but should rely on existing practices, standards, and infrastructures, then the account-based solution is not very counterintuitive. Then, of course, some people say the digital euro should really aim at being a modern form of banknotes, and banknotes are a bearer instrument. They're exchanged in a fully decentralized way. There's no central ledger. There's no ledger at all. There's no distributed ledger. There's no central ledger. They are tokens circulated in a decentralized way, not recorded who holds what. Of course, for digital payments, that's less obvious than for banknotes. So it raises security issues. And so this is probably possible, but probably also with limitations. And maybe at the end, it is for a first release too challenging. But all this is not concluded yet. All this will be looked at in the investigation phase. Then online versus offline is not totally identical to the question of central ledger or no ledger. There are solutions which use cryptographic protocols which do not rely on a central ledger, but who are nevertheless relying on online exchange of messages. So yeah, it's not exactly the same as account versus bearer-based, the dimension online versus offline. And then the question of a programmable euro that you have discussed in the previous session. And of course, the private sector is also working hard on here use cases and technical solutions. The question will be, is the digital euro at the beginning already in that business as well? So functional scope, just some elements. So if we imagine that the digital euro would in any case be a retail means of payment for citizens, then yeah, it is first of all, if you want a modern payment solution for the POI, and that should then be able to take the form of mobile payments, cards payments, and computer access for e-commerce. It should be made available, obviously, throughout the entire euro area. It should be mindful of privacy. It was promised to be free of charge for basic use cases by payers. And it should also support financial inclusion, which is a big topic on its own. then it should avoid undesired effects on financial stability and monetary policy, and it should ideally also allow for offline usage and programmability. So the digital euro should be a complement to private initiatives. Some key arguments to support this view. First, the retail payment market is a huge market where several means of payments, several solutions coexisting are desired, as it is such a big market, and as, if anything, it is a market that tends easily to a few players with market power. And if you want, the entrance of the central bank into retail digital payments has also this motivation to preserve competition, to preserve one solution which would be run by someone from the official sector, from the public sector, who has no incentives to abuse market power, but has incentives to offer a solution which serves citizens in any case. This will not, however, pretend to be necessarily always the most innovative solution. Of course, we want to reach similar standards in terms of convenience and usability as private solutions, but we would see the private sector always to be maybe one step ahead in terms of latest innovations that then can be followed also by a digital euro. The ECB has no ambition per se to manage the front-end solution and the customer relationship, but would like here to rely on supervised service providers. And there's no ambition to take away deposits from banks' balance sheets. There's a clear view that we need for digital euro built-in instruments to prevent large deposit shifts. Also in the low interest rate environment that we currently have, or in times where the banking system would be perceived as particularly vulnerable. So we have to be prepared to this. And just to recall, currently AAA rated government bonds trade at negative yields. So offering a digital euro without access constraints at 0% is not really feasible unless we want to undermine the current monetary policy, because we would really set a zero floor to interest rates, which would not seem to be compatible with the currently existing and desired level of interest rates. The footprint of the digital euro on the industry and payments in general will depend on ? So definitely, of course, the convenience for users. If we come with something that is inconvenient, less convenient than private solutions, then it is unlikely to be popular. And then we'll also have less footprint on the industry in general. Then, of course, it is important that we make it attractive for the involved industry to support the digital euro and to encourage its use. And the two key players here are the distributors, the banks, presumably, or other PSPs, and the merchants. And merchants, in digital payments typically pay a merchant fee. Question, is there a case for such a thing for a digital euro? Is there what in general, let's say, is a business model of the digital euro? Is there any consideration on cost recovery, or is it a public good? So all those things will have to be analyzed further. Then, of course, the legal tender status will be a very important dimension. Legal tender status would support the use of digital euro for obvious reasons. So banknotes are currently the only legal tender. So should that be applied to digital euro? Then, of course, relevant will be the breadth of the functional scope and the use cases. I mean, if we assume that we can manage from a project perspective a very broad scope, then of course we can see that as a parameter where we can also choose. And the broader, the more the digital euro will impact on the industry, because it will gain, market share in more use cases. And then, of course, also the more attractive the digital euro will be in terms of remuneration. And maybe in, trying to anticipate this footprint and the extent to which the digital euro will grab market share is very different if you look at the store of value function relative to the means of payment function. The economics is maybe very different. On a store of value, I guess you can steer the attractiveness of the digital euro and the volumes that you will observe at the end relatively well, be it through limits or more elegantly by a tiered interest rate system, where very high volumes on a single account would be subject to a less attractive remuneration. So to not invite, let's say, a large scale store of value function of a digital euro. For means of payments, it's more complex, though, because means of payment is by nature a matter of network effects, and predicting and steering a certain market share in an industry where network effects are overwhelming is definitely more challenging, than to control somehow, let's say, the stock of digital euro, the store of value component. So very different economics across those two functions of money. And of course, we should not view the impact of the digital euro on the financial system purely, let's say, negatively, if I may say, call it this way, that there's a competition for market shares that we will, crowd out or not crowd out. But we should also, of course, have in mind to cause a positive innovation. So positive developments in the private sector by interlinking, by reaping synergies. And let me mention very quickly, we had a public consultation out with 8,000 replies, 94% from citizens, not totally representative. Also 90% of those citizens were male. Anyway, the feedback emphasized in particular privacy. And regarding the way forward, so in July, the Governing Council may decide on the launch of a project. That would be an investigation phase. Investigation phase means really to determine the scope, the use cases, the technical solution could be followed by a development phase afterwards. Yeah, thank you very much.
Thank you very much, Dr. Ulrich Bindseil from the ECB. There would be one short question from our audience. I think you could talk about that for hours, but let's try to keep it short. Are you open to that?
Yes, sure.
Great. And the question was, how do you deal with privacy concerns at the ECB?
Okay, as mentioned, privacy was a top priority in the public consultation. And first of all, there's an acquis on privacy. Of course, the private payment solutions also have to apply, of course, all the data protection regulation that exists. So first thing, we have to do it as well. No doubt that this is our minimum standard. Then we are happy, of course, to go beyond that to try to, minimize. We have no interest in the data for commercial reasons. So we only have to store data when it is necessary to, let's say, be able to prove the transactions from the perspective of the payer and the payee, or if we are forced to do it to comply with AML, CFT regulation. And there it's up to the legislator. If the legislator, is currently treating cash and digital payments differently, in terms of anti-money laundering. So if the legislator wants to treat the digital euro in a third special way, this is fine with us. No, this is really a policy which is not, owned by the central bank. So we have no interest in data. We are happy to make it as private as it can be. We are in the hands of the legislator, then, of course, on AML CFT regulation.
Great, perfect. Thank you, Dr. Ulrich Bindseil.